What's your take on the current valuations on the market at the moment, where some have suggested that, broadly speaking, we are looking at a market that's overbought, and others saying that we're looking at a possible 25% further upside to the year end?
Well, I think the market had already factored in the possibility of a win, and the fact that in the referendum by the yes camp, and the fact that did come through, it seems that the expectation now is really on the foreign front. The fact that we had seen a market being moved by the local investor largely over 3 or 4 weeks before the referendum. Now we have seen progressively increased participation, especially from the foreign front, in terms of buying rather than selling. And so that is expected to bring in the much needed push upward. So we do expect a support level anytime now. And the thing is that we have also seen a sort of decline in the volumes that have been trading, which means that most investors did sit back immediately after the results came out to see what direction the market would take. But I think once they have made their decision and taken their positions, we are expecting to go into another bullish run.
For now, we've got those corporate earnings being keenly eyed. It's looked at to be the key driver of the markets moving forward. Barclays Bank posted a 5% growth in first half pre-tax profit to 4.75 billion shillings. Overall market reaction to that results release, bearing in mind that this is a bank that had reported a drop in profits for the first quarter, backing the trend amongst the overall banking sector.
Well, Barclays largely beat expectations. Personally, I expected it to remain rather flat, but the fact that they've seen an increase just goes to show that the economy is on a recovery trend, and that's a great thing. I think they're still being pretty conservative on the lending front, but they are still lending quite heavily out there. But we haven't seen them aggressively coming out in the expansion, expansion program that they had before, the pre-crisis period. However, I think as we go into the second half of the year, we are looking at various corporate deals, various issues on the market, and I think that's what's going to be the focus of the market now. Having seen stocks do quite well, volumes are okay, I think now we are looking at various rights issues. We are hoping that those will be the drivers for the market.
Well, talking about rights issues, Samuel, we've seen the Capital Markets Authority approving a 2.5 billion shilling Standard Chartered Bank's rights issue. How are you expecting Standard Chartered to trade on the back of that announcement today?
Well, the expectation is, we don't expect it to really affect Standard Chartered because, one, unlike KCB, which is largely owned by a local retail investor base, Standard Chartered has there's a big chunk that is owned by their mother company, and therefore, and with KCB, of course, the government did not take up their rights. So I think there's not much. There isn't a very big level of uncertainty on the fact that the big probability that the mother company will take up most of their rights, and the fact that it is in such a huge rights issue. So we don't expect that to affect the share price very much. We also have TPS being announced today, so I think that's another one to watch. But we also do expect that will be taken up heavily by the the sister companies, which are largely owned by the Aga Khan